Why has XRP plummeted back to its pre-lawsuit levels even after its victory against the SEC? Today we're diving into that mystery, analyzing the market's bigger picture. I know many of you feel let down by XRP's recent performance, so let's get into the details. I'd like to remind everyone that during XRP's peak phase, I was among the few YouTubers cautioning that we might see a reversal of those gains, as I was more into short-term trading. Welcome back to Moneyside, your trusted hub for all things XRP. If you're just discovering us, make sure to click subscribe and hit that bell, so you're always in the loop with our latest XRP insights. Loving our content? Give us a thumbs up, and let's get a conversation going in the comments below. Looking at the current situation, XRP is hovering around the 50-cent mark. This is reminiscent of its position in June, prior to its significant surge. The pivotal moment came when it was announced that XRP's retail sales on exchanges weren't deemed securities, propelling its value skyward. However, after a minor setback and a subsequent bullish push, the bears seem to have taken control. My take? We're not in a bullish phase right now. The market's lacking liquidity. The victory over the SEC might have had a more positive impact if it occurred during a bull market onset. Many anticipated this was the beginning, but current trends suggest otherwise. Still, I remain optimistic about the future and maintain my long-term investments in XRP. Today might even be an opportune moment for dollar-cost averaging into your positions. But as always, whether it's a golden opportunity or not is for you to judge. The RSI indicator currently points to a strong oversold position, hinting at a possible turnaround soon. However, the recent gains have been eroded, and XRP now lingers below its 200-day moving average on the daily chart. An essential update to note is Judge Torres's approval of the SEC's appeal against Ripple. While the SEC swiftly initiated this appeal and got the nod, many, including Brad Garlinghouse, believed the process would stretch over 2 years. A perspective I shared with you all on this channel, despite not being a legal expert, was my skepticism about this 2-year timeline. And now, just a month in, the appeal motion is already in play. The broader market appears bearish. One theory suggests potential market manipulation by significant players aiming to enter at more favorable prices. This theory could explain the downward pressures on XRP, Bitcoin, Ethereum, and several other altcoins. Pushing this speculation aside, it's evident that influential entities are making moves. Today, the entire market is down by 1%, bringing us close to a $1 trillion market cap once more. A mere few days back, the Federal Reserve's summary seemed dismissive towards the common investor, acting as the tipping point for the current market sentiment. Courtney, the recent notes from the Federal Reserve's gathering suggest that the majority of attendees recognize significant inflationary risks that might necessitate more stringent measures. The Federal Reserve's stance appears quite hawkish from this observation, and the market felt it. Upon this release, the market tremors were evident, causing ripples in both the S&P 500 and Bitcoin. Specifically, a couple of Fed representatives were inclined towards maintaining the current rate, while most perceived substantial inflation risks that might warrant added interventions. From my investigations, there's roughly a 40% probability of impending interest rate hikes, which the market isn't too thrilled about. In tandem with this, another jolt came a day later. The colossal Chinese real estate entity, Evergrande, has sought bankruptcy protection within the US, underlining the growing property predicament in China. This move is geared towards safeguarding Evergrande's stateside assets while addressing its enormous debts. The company's debt reportedly surpasses a staggering $300 billion. This event adds to the indicators of strain in the world's second-largest economy, as China's central banking system recently trimmed down interest rates, hoping to stimulate expenditure. With Evergrande's colossal debt of $300 billion, it's evident that there's trouble on the horizon. This, in many ways, was an additional weight that dragged Bitcoin's value down further. But the overall market reaction didn't end there. Recent buzz from the Wall Street Journal suggested that Elon Musk's SpaceX offloaded Bitcoin worth $373 million. Now, we've discussed this before. Even Musk's platform X has stepped up to challenge this claim, emphasizing a lack of evidence to support such a transaction. The Wall Street Journal's report appears nebulous, citing that SpaceX merely adjusted the value of its Bitcoin holdings downward by $370 million over the past year and in 2021. And it's essential to remember that SpaceX operates privately, meaning they're under no obligation to disclose financial activities, unlike their counterpart Tesla. This uncertainty also sent tremors through the market. Combining the impact from the Federal Reserve, Evergrande, and the speculative SpaceX news, we witnessed a domino effect of market liquidations. Shockingly, The liquidations over 24 hours surpassed what we saw during the FTX collapse. So, what's causing this massive market plummet? One theory suggests this might be a strategic play to create more attractive entry points for institutional investors. Think about it. If you're a titan like BlackRock gearing up for an ETF launch, wouldn't you prefer to kick off at a time when Bitcoin is undervalued, offering more growth potential to your clientele? While I'm not asserting this as fact, the strategy seems plausible. The true forces behind the Wall Street Journal piece remain in the shadows, but the possibility of manipulative tactics can't be entirely dismissed. Drawing connections between Bitcoin and XRP, it's apparent that their fates are intertwined, moving in sync, with the S&P 500 also breaching its primary support, although showing brief resilience recently. The broader market is unquestionably in a tumultuous phase. The DXY has surged past its resistance, casting a shadow on the short-term outlook for cryptocurrencies. Yet I wouldn't write off XRP just yet. There's a resilience I still see in it. After breaking even on my trades, I doubled down on my long position with XRP. As it stands, I'm reaping a 51% profit from that move. On another note, today's greed and fear index hovers at 39, indicating a resurgence of market apprehension. The last time we sensed this level of unease was back in January. Reflecting further, such trepidation was also evident around March 12th. At that point, Bitcoin was valued at $25,800. So, what's the implication here? The market still harbors an upward trajectory. I remain optimistic, as long as we stay above the $24,900 threshold. Even if Bitcoin dips, I'm poised to buy more. Stay in the loop with the market's pulse. Give that like button some love, subscribe for updates, and I'll catch you on the flip side. Till then, take care. Please remember, I am not a licensed financial advisor. The content presented in these videos is purely for entertainment purposes. I always encourage viewers to conduct their own research and consult with professionals before making any financial decisions. Thanks so much for tuning in. If you enjoyed the video, please give it a thumbs up, and don't forget to hit the subscribe button. Also, make sure you turn on the notifications to be the first to know when I release new content. I'm excited to catch up with you in the upcoming video. Take care,